For more on the market's response to the Fed's 75 basis point rate hike this week, we've got Jay Clayton joining us. He, of course, is the former SEC chairman and a CNBC contributor. And Jay, some pretty wild rides in the market. You've got every one of the major equities indexes, with the exception of the Dow, in bear market territory. Dow's almost there at down 19%. You've got the moves in crypto. You've got the huge swings in Treasury yields. What does all this mean? And are people who sit on the Financial Stability Oversight Council that you used to sit on as head of the SEC, are they meeting and getting concerned at this point?
Well, good morning, Becky, and thanks for having me on. Look, there is a job for regulators to be looking at the markets, continue to look at the markets, and see, to put it bluntly, if markets are missing something. Now, 2 months ago, we spoke about the risks in the marketplace, energy, agriculture, supply chain, and inflation. And we talked about how the market was basically pricing in an almost perfect response to those risks. Well, that hasn't happened. What we have now is the market has recognized that those risks remain, and we've had this sell-off. Now, there's some good news here, which is the sell-off has been very orderly, and there's some other pieces of good news that we can talk about. But if you're a regulator now, and the market is the best predictor of future outcomes, if imperfect, you're looking at the market and you're saying, okay, maybe we're getting inflation under control. I applaud the move that the Fed has made. I think that it's exactly what they should be doing. There's consensus around that. But these other risks remain. You have risks in energy, you have risks in agriculture, you have risks in supply chain. And the market is asking, are we going to get those right? Or are there surprises on the horizon? That's the type of conversation that is going on among the federal financial regulators and others.
I hear you saying that this is orderly. That's what we've heard throughout. But there have been some questions that have been raised this week, not just with crypto and what might be levered to that, but then also what might be levered to interest rates when they spike, when those yields spike so quickly. Any concern on either front?
Look, I think that's exactly what we should be looking at going forward. If the interest rate impact is going to have what I would say is a very negative impact on the consumer going forward. One of the pieces of good news that folks are citing is that consumer and business balance sheets remain in good shape. Well, how long can that be the case if we have a spike in interest rates, energy costs stay the way they are, food costs continue to rise, and put on top of that geopolitical factors. I mean, although we have geopolitical instability over the last 3 to 4 months, over the last month or two, it's kind of been the same in this instability. Are we going to get more? Is there going to be a retrenchment, what I would say is a nationalistic retrenchment around energy and food, which would create even greater instability? These are the kind of things that people talk about.
Yeah, let's talk about that, because I think what we're hearing now are whispers that we could talk about stopping exports of natural gas, of maybe diesel, other things, because our consumers are now facing such huge price hikes. But what would that mean if we were to do that and leave our European allies who are being pressured so heavily by Putin right now? Like, what would that mean?
Look, I'll tackle it from the financial regulator side, and we can talk about sort of, what's going on at maybe the State Department. But you mentioned the FSOC. That's the domestic Financial Stability Oversight Council. There's also the FSB, which is where the global economies coordinate with their financial regulators, and the G7. You raise a point that I'm sure is being discussed, which is, let's talk about what retrenchment would mean, domestic, insular retrenchment in these markets for financial stability globally. It would definitely have an impact, and this is something that those people, whether it's the Bank of England, the Banque de France, our partners in Germany, should be talking about with the U.S. regulators.
Does anybody from the Defense Department sit in on these meetings? Because the geopolitical risk that would come from this.
I think in these types of situations, you can't be rigid. Like, maybe Defense Department wasn't there when we're talking about, the 2008 financial crisis, but it's present today. You can't have a rigid view of who sits around the table, but these are the types of issues that should be discussed.
Your bottom line coming out of this, are you optimistic at this point? Have we seen some of the worst pain? Or are you still feeling pretty nervous based on the risks that are still outstanding?
Look, my bottom line is the more global leadership that we have around these issues of energy, agriculture, supply chain, because of how integrated we really are. I mean, look, we've had this disruption as a result of the war and aggression in Russia and the like, but a relatively small player in the global economy. But let's recognize just how important coordination on these global markets is going forward and into the fall.
Shepard Smith here. Thanks for watching CNBC on YouTube.